Hi friends, welcome to our class. In this class, we are going to discuss about transactions analysis on the basis of rules of double entry system. Before that, let's remember the types of accounts and rules of accounts. So accounts can be classified as three types: personal accounts, real accounts and nominal accounts. Personal accounts related to individuals, group of persons and legal bodies created by law, banks, etc. Example: Ram account, Srinu account, Andhra Bank Limited account, SBI account, Infosys Limited account, etc. Real accounts related to assets and properties owned by the business. For example, buildings, machinery, furniture, cash, land, goodwill, patents, etc. Nominal accounts related to expenses, losses, incomes, and gains. For example, salaries, rent, commission, interest, stationery, etc. And rules of accounts. So according to personal account, debit the receiver, credit the giver. According to real account, debit what comes in, credit what goes out. According to nominal account, debit all expenses and losses, credit all incomes and gains. Now, so we are going to discuss about the transactions transaction analysis on the basis of rules of double entry bookkeeping system. So every transaction has two aspects. So first transaction is started business with cash. So this transaction involved two aspects. One is cash, second one is capital. So cash is an asset, that's why it's a real account. And capital means the amount invested by the proprietor, so it's a personal account. So since cash comes into the business, according to real account, what comes into the business, that will be debit. And capital provided by the proprietor, so that's why according to personal account, giver will be credit. And next transaction, goods purchased from Mohan Rao. So in this transaction involved two aspects. One is purchase, second one is Mohan Rao. Purchase Mohan Rao. So purchase, here we are purchased goods is asset, that's why it's a real account. And Mohan Rao is a person, so that's why it's a personal account. So when we purchased goods will come into the business. According to real account, what comes in, that will be debit. And Mohan Rao is a personal account. So here Mohan Rao is a giver. So according to personal account, giver will be credit. Next, furniture purchased for cash 10,000 rupees. So in this transaction there are two aspects are involved. One is furniture account, Second one is cash. So furniture is an asset. That's why it comes under the real account. And cash is also an asset. That's why it is also comes under the real account. So both are real accounts. So when we purchased furniture will comes into the business. So according to real account, what comes into the business, that will be debit. Next, for when purchased furniture, we have to pay the cash. When we paid cash, cash will goes out. So according to real account, what goes out, that will be credit. Next, goods sold on credit to Devaraj. In this transaction, there are two aspects are involved. Those are Devaraj account. Second one is sales. So Devaraj is a person. That's why personal account. And sales. What we sold here, goods. Goods is an asset. That's why real account. So here Devaraj is a receiver. According to personal account, receiver debit. And when we sold goods, goods will goes out. According to real account, what goes out, that will be credit. Next, goods purchased for cash. So in this transaction there are two aspects involved. So those are purchase. Next, cash. So we are purchased goods. Goods is asset. That's why real account. And cash. Cash is also an asset. That's why it is also a real account. So when we purchased goods, goods will comes into the business. According to real account, what comes in? Debit. When we purchased goods, we have to pay cash. So that's why cash will goes out. According to real account, what goes out? That will be credit. And next transaction. Goods sold for cash. In this transaction, two aspects are there. One is cash. Second one is sales. So cash is an asset. That's why it's a real account. And sales. So what we sold here, goods. So goods is asset. That's why it is also real account. So both are real accounts. So when we sold goods, cash will comes into the business. According to real account, what comes in? That will be debit. And when we sold goods, goods will goes out from the business. According to real account, what goes out? That will be credit. Next, rent paid. In this transaction also there are two accounts are there. One is rent account. Second one is cash. So rent is an expense. That's why it's a nominal account. And cash is an asset. That's why it's a real account. So rent, I already told you, rent is an expense. Expense and losses will be debit according to nominal account. And when we paid rent, cash will goes out from the business. According to real account, what goes out? That will be credit. Next, commission received in cash. In this transaction also there are two aspects. One is cash, second one is commission received. Commission received. So cash is asset, that's why real account, and commission received an income, that's why nominal account. So when we received commission, cash will comes into the business. According to real account, what comes in? That will be debit. And commission received is an income. According to nominal account, incomes and gains will be credit. Next, cash deposited into bank. Cash deposited into bank. In this transaction there are two aspects are there. One is bank, second one is cash. So bank is personal account. Personal account, I already told you. So personal account related to individuals, group of persons, legal bodies created by law, banks, organizations, etc. are the personal accounts. That's why bank is a personal account. Cash, asset, that's why real account. So here bank is a receiver. According to personal account, receiver will be debit. Next, cash. So when we deposit cash into bank, cash will goes out from the business. According to real account, what goes out? That will be credit. Next, cash withdrawn from bank for office use. In this transaction also there are two accounts, two aspects involved. So one is cash, second one is bank. Cash is an asset, that's why it's a real account, and bank is a personal account. So cash, when we withdraw cash from bank for office use, cash will comes into the business. According to real account, what comes in? That will be debit. And here bank is a giver, that's why according to personal account, giver will be credit. Next and last transaction, cash drawn by proprietor for personal use. In this transaction two aspects are involved. Those are drawings, second one is cash. So drawings means the amount withdrawn by the proprietor for his personal use, those are called drawings. So that's why drawings is a personal account. And cash is asset, that's why it's a real account. So here proprietor take the cash for his personal use, that's why here drawings is a debit. Why? Because proprietor receiving the cash. So receiver, according to personal account, receiver will be debit. And when proprietor takes the cash for his personal use, cash will goes out from the business. So according to real account, what goes out? That will be credit. So this is the analysis of transactions on the basis of rules of double entry system. I hope you understand. So we will meet in our next video. Okay, thank you friends.